Hello everyone. Good morning. Good to see you again. Welcome back to my class. I hope you are all in a good conditions. By the way, is there anyone absent today? No? Okay. I think you are in this class right now. Before we start our lessons today, let's pray together and pray begin. Finish. Student, today we'd like to learn about reverse journal entry. What is reverse journal entry? Let's take a look. The learning objective of this material is one, to understand the function of reverse entry journal. Second, to identify the account that must be made in reverse entry. And third, to perform reverse journal entry. In accounting process, we have learned about financial transaction, and when we have learned about journals, ledger, trial balance, adjustment journal, closing entry, financial report, and now we'd like to learn about reverse entry. Why we have to learn about reverse entry, and for what this reverse entry we have to do. Reverse entry is absolutely due in the first period of the next period. So this is the definition of reverse journal entry. Journal entry made at the beginning of an accounting period to reverse or cancel out adjusting journal entries made at the end of the previous accounting period. Why we have to do reverse? Because we have to cancel, or we have to adjust the adjustment journal that we have made. So there are some conditions of this why we have to do reverse journal entry. Not every adjustment should be done by reverse journal entry, but there are some cases of reverse journal entry. What is the purpose of reversing entries? Reversing entries enable the bookkeeper to continue preparing routine journal entries in the new accounting period. So this is the special account for reverse entry. Not every single account in adjustment journal have to be reversed, and this is some of the special account for the adjustment journal that we have to reverse. First, the condition 1 is when there is a net revenue receivable, and the second, if there is a prepaid revenue recorded as a revenue. Third, if there is payable expense or accrued expense, for example, like wage payable, interest payable. Fourth, prepared expense recorded as expense, for example, like insurance expense, rent expense. So if you are a little bit confused about this, so let's take a look at this example. This is the example for accrued or payable expense. In December, Lembayan Shop accrued $250 of wages payable for the half of his employee pay period that was in December but wasn't paid until January. So we have to do adjustment journal to make sure that the amount of the journal recorded is real actually happened in that month. So the financial report is actually in that period. So the adjustment journal for this case is wage expense 250 at debit and accrued expense 250 at credit. And after the adjustment journal and after the financial report, in the next period, in the first period, in the January 1st, we have to do reverse entry. And the reverse entry is, it's just a simple. So reverse entry is actually reverse the adjustment journal. So you don't need any account or you don't need any number, just reverse it. Like in the adjustment journal, which expense is in the debit, so you have to reverse it on the credit. And also the accrued expense for adjustment journal is in the credit, so you have to reverse it on the debit. So the reverse entry become accrued expense 250 at debit and wage expense 250 at credit. Okay, next. This is the example for prepaid expense. In 1st December 2019, Lembayung Shop paid 2,400 of prepaid insurance for 2 months. So the journal we made in 1st December is insurance expense 2,400 and cash 2,400. So just remember that we do reverse when the prepaid insurance is recorded as expense. Here, recorded as expense. So we have to make reverse in the next period. And then this is the 1st December. We have to do adjustment journal in the last December. And the adjustment journal is prepaid insurance 1,200 in debit and insurance expense 1,200 in credit. Yeah, because this is debit, we have to make it to credit. 1,200, where is come from? 1,200 comes from 200 and 2,400 is divided by 2 months, because from 1st December to the last December is only a month. So we have to do adjustment journal. Okay, I think adjustment journal have been we have learned it before, so I don't really have to. And then on the 1st January we have to do reverse entry journal. Just as simple as I have told you before, that reverse journal is just reverse your adjustment journal. If the prepaid insurance before is in the debit, you have to make it in the credit. If the insurance expense you have made it before in the credit, you have to make it on the debit. Just simple as that. With the same amount. Okay, next. For the revenue receivable, Lembayung shop had interest revenue $100 up to December. This revenue will be paid in 5 January. So we have to make adjustment journal in the last December with account interest receivable $100 and interest revenue $100. And we have to do reverse entry. In January 1st, just reverse the debit to the credit and the credit to the debit. Just simple as that. With the same amount, $100. Okay, for the last example, we learn about prepaid revenue. In the 1st December, Lembayung shop received payment $1,000 for prepaid commission for 2 months. So we have to do a journal in the 1st December. This is cash in the debit because we received payment $1,000. And then commission revenue is in credit. Prepaid revenue will be reversed when it recorded as revenue. Commission revenue. Okay, and then we have to do adjustment journal in the last period because this payment is for 2 months, so we have to make it for 1 month because the 1st December up to the 31 December is only 1 month, so it's only a half of $1,000 or it's only $500. We have to do adjustment journal, commission revenue for debit $500, and then prepaid commission is in credit $500. And then we have to do reverse entry. Just remember that reverse entry is only reverse your adjustment journal. When the commission revenue in a debit, you have to make it in the credit, and the prepaid commission in the credit, you have to make it in the debit. So the reverse journal will be prepaid commission in a debit $400. Sorry, I mean $500, and then commission revenue is $500. Well, I think that's all.